All right. Good morning, everyone. Good morning. I'd like to welcome you to our Groundhog Day event. You know, it's always a great day to be in Monroe, but today is especially exciting as we celebrate our city's growth and future. And since today is Groundhog Day, I want to make something very clear. We are not here to repeat the past. We are here to build on the momentum that's been created, to take the strengths of our city and expand them, ensuring that Monroe remains the best place to live, work, and do business. Monroe is a full-service city, one of the few in North Carolina that manages its own electric, natural gas, water, and sewer utilities. That kind of local control makes us resource independent, meaning that we can plan strategically, keep costs manageable, and reinvest in our community. With an annual budget of $250 million and an investment portfolio valued at approximately $286 million, Monroe is in a position of strength, and we are committed to making sure every dollar we spend leads to sustainable growth. Monroe has already laid a strong foundation for economic success, though, thanks to the hard work of our dedicated city staff. And by the way, also to the staff here at the Dow Center Theater. Thank you so much for all that you've done. Thank you. Yes. They have all developed and implemented economic incentives that attract new businesses and support existing ones. They have worked tirelessly to ensure Monroe is an attractive destination for both local entrepreneurs and global industries. Now, with the creation of our Economic Development Office, we are taking those efforts to the next level. We are not replacing the work that has been done, we are elevating it. This office allows us to be more strategic, more focused, and more aggressive in bringing in new opportunities, ensuring that every development benefits the people of Monroe first and foremost. We are making these investments because we have to. Monroe and our surrounding region are projected to grow by 50 to 60% over the next 20 to 25 years. That is an enormous shift that will bring more families, more businesses, and more demand for infrastructure. Growth like this does not happen by accident, though. It happens because people want to live and invest here. It happens because we have made Monroe a desirable, business-friendly, and community-driven city. But with that growth comes responsibility. We cannot afford to be reactive. We must plan ahead for a couple of things. Infrastructure investments to support new industries and neighborhoods. Business incentives that drive innovation and attract high-paying jobs, and downtown revitalization efforts that enhance quality of life and create lasting economic opportunity. And speaking of revitalization, just look at what's happening in downtown Monroe right now with all of you here this morning. All across this country, people are craving authentic downtown experiences, places where they can walk, shop, and dine, and be part of a community. That is exactly what is developing right now before our eyes here in Monroe. We now have events happening every week, bringing people from all over to experience our downtown. New businesses are opening, adding to the charm and energy of the area. Excitement is at an all-time high, and it's only the beginning. And we're taking this even further. Through targeted incentives, we are bringing in more businesses, restaurants, shops, entertainment venues, all of which will strengthen the backbone of this city. A strong downtown is the heart of a strong community, and we are making sure that Monroe's heart is beating stronger than ever. With the new hotel coming in, more restaurants, new shops, and even a new downtown residence, Monroe's downtown will soon be a destination not just for our residents, but for people all over Union County and across the state. This is how we build a city that thrives, not just for today, but for generations to come. Now, as we continue to grow, One of our most valuable economic assets is the Charlotte Monroe Executive Airport. With a 7,001-foot runway, over 73,000 annual operations, and 120 based aircraft, this airport is not just a transportation hub. It's an economic engine. It contributes $90 million in economic impact to our community. It generates $5.1 million in tax revenues that help fund city projects. It supports over 420 jobs, with even more to come. We are working to expand opportunities at the airport, making Monroe an even stronger destination for business aviation, cargo operations, and high-tech industries. This airport is helping drive our economy forward, but our downtown is the soul of our city. Together, these assets make Monroe the perfect place to live, work, and invest. As we take this next step in our economic development journey, we need leadership that understands both our community and the economic forces that drive success. That is why I am proud to introduce our interim economic development director, Walter Buddy Sprouse. Now, Buddy is one of our own. Born and raised here, but his career took him to Augusta, Georgia. He'll tell you there's in plenty of other places, but that one's pretty cool, where he became an economic development director extraordinaire, leading transformative projects that brought jobs, investment, and innovation to that city. His impact has been so significant that just recently he was inducted into the Economic Development Hall of Fame in a ceremony in Florida. Having Buddy here in Monroe is more than just a win. It is a statement. We are serious about economic development. We are bringing in the best talent. We are investing in expertise, experience, and leadership that will ensure Monroe's future is brighter than ever. At the heart of everything we do is a simple but powerful commitment: Monroe first. That means making sure our businesses have the tools to succeed. That means ensuring our residents have the infrastructure and services that they need. And that means creating an economic strategy that builds a Monroe that is stronger, more prosperous, and better positioned for the future than ever before. The work we do today will determine what Monroe looks like 10, 20, and even 50 years from now. And I could not be more confident with the team that we have in place. The best is yet to come. Thank you. And please join me in welcoming Buddy Sprouse.
A few years ago, I worked for Wingate University. Dr. Tom Courts was the president, and I went in to see him to tell him that I was taking another job to work in economic development. And he said, well, I have two bits of advice for you. He said, I know your name is Buddy and that everybody's called you Buddy because your father's name was Walter and didn't want to have the confusion. He said, but if you ever want to get rid of that nickname, now's the time. And people can start calling you Walt. And I said, okay. So at that point, I changed. And I said, what was the second little bit of advice, Dr. Courts? And he said, you need to cut your hair a little better, So I cut my hair and started doing that. It's an honor to be in Monroe, especially in this building. I saw Paul yesterday, and I said, Paul, how many times do people come in here and say, wow, I haven't been in this building in X number of years? And Paul said, every day they come in and see it. And I'm just absolutely amazed at how beautiful this place is and what a perfect venue. And thank all of you for being here today. This shows your commitment to Monroe. It shows the commitment to what we're in the process of doing to build the best economic development department in the state of North Carolina. We will do that. It takes a little bit of work, but we are going to be able to do that. And I look forward to working not only with the mayor, but also the city manager and the team at the city. Outstanding people. In just the short period of time that I have been here, I can assure you your tax money is being very well spent. Because I'll see in a lot of communities around, and I tell you what, this is a well-oiled machine here, is what you have with the city. My job today is to introduce our speakers. I will tell you that I have reached that point where curiosity is greater than vanity, so I put glasses on so I can see what I'm saying. I want to introduce first Ian Wyatt. He's a veteran economist with experience in macroeconomic forecasting, industrial analyst, economic data, commercial and corporate finance, and also specializes in labor market. At Huntington Bank, he is the executive director of economics for the commercial bank. In his role, Ian helped commercial clients navigate an economic uncertainty to make better decisions through data. He also leads the commercial bank's competitive insights research. He has a tremendous amount of knowledge that you'll be able to hear today. Prior to joining Huntington, he served as the principal economist at the Metro Atlanta Chamber of Commerce in Atlanta, Georgia. He was a popular public speaker, and he shared his analysis of regional economic outlook and other key economic trends, especially when leading the Chamber's economic development and research team. That played a key role in recruiting factories, headquarters, and laboratories in the area, which created a record of 10,000 jobs in 2022 alone. Prior to that, before he joined Bank of America, he was the chief forecaster at the Bureau of Labor and also worked hard on forecasts for macroeconomic projections. He holds a master's degree in economics from Johns Hopkins University and a BA in international relations from the University of Mary Washington. Secondly, I want to make sure also that you know that I'm going to introduce both speakers now, so you'll have their background, and then after Ian speaks, then Ben will speak, and then we will ask for questions after both speakers have made their presentations. There'll be some microphones sort of around here. It's a little hard to see everybody here, but we're going to try to get all of your questions in and then get finished in a timely manner. After the questions, then I'll ask the mayor to come back up for a very special presentation, and you don't want to miss that. Ben Kinney is publisher of Business North Carolina and South Park magazines. Business North Carolina, of course, as you know, is a statewide business publication that we receive online every morning and then once a month. And it focuses on people, focuses on industry, focuses on trends in the economy in North Carolina. It started 43 years ago and has won over 140 national awards for editorial design excellence, including recognition as the best regional business magazine in the country by the Alliance of Area Business Publications. He served on the board of the Greater Raleigh Chamber of Commerce, the Alliance of Area Business Publications, and served on the NC State Alumni Magazine Advisory Group. He's also past president of the North Carolina State Alumni Association. He's active in the North Carolina Committee for Business and Education, the North Carolina Economic Developers Association, which is very close to my heart, and also is a graduate of Leadership North Carolina. He and his wife Charlotte have 2 sons, and they live in Charlotte. So at this time, would you please give a warm Monroe welcome to Ian Wyatt.
Okay, I guess I don't have a clicker here for slides, so we'll see how we scroll through these somehow. I'll just have to give you cues. Oh, thank you. So thank you. Appreciate you guys having me here today. I appreciate that we actually have decent coffee at one of these events. Good gosh, Alice's, thank you, wherever that is, because so many of these events that taste like garbage. Um, so that's really nice. No, so yeah, a little about myself. I talk to companies all the time. I work in commercial and economic on the econ side at Huntington. That means I work with companies. I'm not very focused, and I'm not really focused on, where should you put your money in the stock market. That's not really what I do. But I hopefully help companies, navigate economic environment, which, as we can see, uncertainty seems to be a little more rising. The last 5 days have been a pretty busy 5 days for me personally. This certainly is very relevant to our clients, a lot of the stuff we're talking about out there. And EcoDev, of course, I took a 2-year detour, although I couldn't bring myself to leave Charlotte. That's actually why I quit the Atlanta chamber. Was driving down to Atlanta every week to do economic development. And we responded to lots of RFIs. I have a good idea of some of the stuff your team does. It's not easy work. It's impressive. So, you're lucky to have someone. And Augusta, having a decent insights into the Georgia economic development world, Augusta is really performing well as a city. So kudos to you and your achievements. So yeah, let's see. Okay, let's go with, is this on? No, or maybe. Anyway, can we just scroll that? Yeah, there we go. We'll just do it this way. So a little about Huntington. You guys probably haven't heard of us unless we have the Ohio State guy in the crowd. Very familiar with Huntington. So we're headquartered in Columbus, Ohio. Our traditional footprint is basically the old Big Ten states. I mean, back when geography meant something to sports. We are now up to the 19th largest bank in the United States. And we're really building out in the Carolinas. We have local bankers here in the front row who actually live basically just outside of Monroe. And we have local bankers across the entire Carolinas for commercial. You're going to start seeing our retail branches popping up in the Charlotte market within the next couple months. The first retail branches are opening in Charlotte. So that's the basics about us. And we, I'm done with my plug now, so we can jump ahead and do the, other than after that great introduction, I don't need to say much about myself. We can skip that, other than I live here, got a couple kids here. I came here in 2009 to Charlotte, and I thought, this is a 2-year stint. It's too small a place for me, and it sucked me in. It is quality of life here. That is really the selling pitch. And I think that's something I'm going to talk about a bit. When I think about why are we growing, fundamentally, and I'm going to do a super short version of my normal macro talk because we don't have a ton of time and I want to make sure we get to your questions. I think one of the fundamental challenges companies are facing when I talk to companies right now is labor. The reality is, outside of immigration, there's basically, and we've been talking about this in population projections for a long time. That was where my career began in the federal government, and we were doing long run forecasting up in DC. We knew this back then because we knew how many kids have been born. Right now, the 25 to 54-year-old population really isn't growing in the United States. Those prime working age population isn't growing. For a while in the 2010s, we were able to sort of delay that pain because the baby boomers delayed retirement. Number of reasons behind that, but the reality is like once COVID hit, a lot of them left the labor force. And a lot of them now, at first, those baby boomers were age 65 to 69. A lot of people still work in that age bucket. But once you get over 70, you're talking single-digit percentage of people are working in that age bucket. And the oldest baby boomers now are 78. So keep that in mind, that huge generation, I think 78, I have to do, 79 as of this year, actually. I had to remember my dad is day one of the baby boom. So I just have to think of like January 1st of 46. So I have to think of his age, and I'll tell you, how the oldest baby boomers are. So you have that huge demographic challenge. And the problem is what's coming behind them. Like their children came behind them, and there's sort of two humps in the US population, two larger age groups. That was the millennials. We had this huge boom in the apartment market for a while. Now they're all in their 30s, and they're all looking for single-family homes. They're moving to outer suburbs. That's a big part of why Union County's growth has been so strong. You have a strong core city, but you also have a strong county out here, and some cities really performing well, and a pretty interesting geographic mix. You see this on the edge of a number of cities, but obviously Union County kind of has its Charlotte commuter portions, but then its industrial portions in areas that are very different, and it's sort of a pretty wide-ranging economic environment here. But overall, the challenge for companies is those, after the baby boomers kids now are in their 30s, what's coming behind them, the Gen X kids, the children of Gen X essentially, are smaller population. And every year, like our 18-year-old population is basically smaller than the year before. And so we aren't replacing them and anywhere near driving growth. So the reality is if companies want to grow, if they want to increase, and unemployment's 4%, they're going to look for where they can find workers. And it's cities that are attractive to live in, that are an attractive environment. And the number one asset, I think, and Mayor talked about this, is providing somewhere people want to live. Because companies will follow workers to some degree, to a large degree now. Workers follow jobs, but a lot of times also companies follow workers. And you see that in economic development. So I think that's, part of what's happening here and what's success. So let's talk, I'll give you the quick macro talk, and then we'll go. This is the very summary version. Fundamentally, where do we see interest rates going? As a bank, I probably cut this yesterday. I cut my forecast. I think the Fed's going to stay nervous about inflation. I said a week ago on Yahoo Finance that Powell was going to wait and see, and Powell said the next day we're going to wait and see. I think a part of it is just the political reality of his job. You don't want to make any statements on tariffs. That's partly the political reality of my job, is you don't want to be too forward-looking on that. But I think it's also a Fed that's nervous about inflation. We have some stickiness in inflation. I think part of that's driven by that tight labor market, especially at the lower end. A little less tight than it was, but it's still, we talk to a lot of companies and, it's the guy down the street paying $1 an hour more, $2 an hour more. If you think of Amazon, what was it, 7-8 years ago? It was groundbreaking when they said $15 an hour. Now you're talking, 22, 23 there. Think of that percent growth. That's like a 50% increase when you think about it in a 7-8 year span. And the reality is any employer paying hourly has to compete with Target, has to compete with Amazon. And, maybe you can have better working conditions than Amazon. People would rather work at your place, but you can't pay that much less. So that's really that lower end of the labor market we still hear consistently, and especially when I talk to manufacturers in Union County. Did your manufacturing forum not too long ago. That was definitely a theme of it's hard finding workers at the lower end of the labor market. So I think there's some stickiness in inflation that's sticking around there because a lot of those jobs, it's a large percentage of your costs if you're a restaurant or your labor costs. Anyone can tell you that, or like childcare. And the problem is there's still some wage pressure there, and that's pushing up inflation. I think, and the Fed, I think, is nervous that, they don't know if tariffs will be inflationary. They're not sure. That could, you could see the exchange rate offset that. We kind of saw that yesterday for a bit. You looked the peso and the Canadian dollar tanked, and that was going to offset some of the effects of inflation, any sort of price increases that come from tariffs. But they're nervous, and so they're going to wait. So we think summer at the best, short run rates don't go down till then. Data dependency, whenever the Fed says this and all this, what we're seeing now is we see a very volatile interest rate environment. So what I want to tell clients, if you're a company and you're borrowing and you see a decent long-term rate, you might be prepared to lock it in, or if you want to do, we'll say for bigger clients, when we talk about the swaps market, at least be prepared to make a move in the swaps when you see rates move quickly. Because the reality is we have a lot of treasury issuance by the federal government. And because basically, one, they have to a lot of roll over the debt. but two, they have to be net new issuers because we're running a very large federal deficit. In fact, this year, 18% of federal spending is just interest. 1 in 5 tax dollars, yes, are paying for interest on the federal deficit this year. That's a huge increase because rates have gone up so much. So that creates volatility in the markets. And traditional buyers like the Saudis, the Middle East, aren't buying because oil's not profitable right now for them. So they aren't sitting on tons of cash to recycle. But I think the other thing we'll tell companies if you're looking to borrow, or even like cities if you're looking to issue, is like the risk spreads are really low right now. The spread you pay over treasuries is very low. It's a very attractive environment. Banks want to lend. So if we jump to the next one, that's sort of my summary issues. So you can see, this is why I think the Fed's nervous, and why I think things are good, but also the Fed's nervous. So there's two stories here. Let's start with this story here. This is the good story generally. We still have stable job growth. We're still adding a couple million jobs over the last year. That's really good. Unemployment got revised down slightly, but now it's 4.1. It peaked at 4.2. So all those are good metrics. You say, okay, things are good. Why is the Fed nervous? I think there are two reasons the Fed's nervous. One, I had to torture the axis on that graph, but you can see unemployment's gone up from 3.5 since last summer. It seems to have stabilized. The Fed seems to be thinking, okay, that's not an issue. But anytime unemployment starts to really rise, that tends to be correlated with a recession. It doesn't seem to have happened this time. I think in general, correlations don't mean that they don't always happen in economics. That's the reality of economics. It didn't seem to happen this time. The other thing, and this is really a big thing, and I think this is very true in the college job market, is people are kind of stuck. Hiring is unusually low right now for the level of unemployment. People aren't quitting jobs much, and they aren't getting hired much. Generally, people quit because why do you quit? Somebody gave you more money and you moved down the street. You took a new job. Most people don't quit that's the main reason. You got your next gig lined up. So it tells you the hiring conditions aren't as strong. The Fed would like to see a little more turnover. 2 years ago, the Fed really wanted turnover to come down. It was too high. Companies were really struggling. I think, though, there's a two-speed labor market, too. I think this much more applies to what you think of as college jobs because the job growth hasn't been there. The job growth has not been in professional and business services, although Charlotte's outperformed actually in that category as a metro area. When I say Charlotte here, I'm not referring to the city. So we're certainly in the metro area. And it's not been in finance. It's not in real estate, and it's not been in IT. IT jobs have declined nationally. Where has the job growth been? It's been hotels. It's been restaurants. It's been transportation. It's been construction. All those things you don't think of as requiring a college degree. And we sort of have this mismatch. And I talked to employers, one today, we have a lot of people graduating with college degrees. That's the only growth in the labor force is people with a college degree. But the job growth is not in those categories that normally that those people are expecting. And they're going to have to adjust to some degree. I think where we have issues are, really skilled trades. I talked to manufacturers, was talking to them in Indianapolis this week, just had a conversation. I've had this conversation so many times, and I hear it over and over again. The really skilled folks in manufacturing all have gray hair. They're all nearing retirement, and we don't have new tool and die makers coming out to replace them. If I were doing eco dev, talking to South Piedmont, I think that would be certainly an area I'd certainly encourage kids to look at when we're talking about skilled trades, because we can't reshore manufacturing if the skilled labor force simply doesn't exist. I have a lot of employers saying, forget reshoring manufacturing, just maintaining manufacturing, I'm worried about. So those are kind of some of the themes we're hitting in the labor market. But right now, the good part is jobs are still robust. People aren't getting laid off, so their layoffs are low, and wage growth is above inflation. So those are all good things. People are able to spend more. They're feeling good about their balance sheets. Their stock portfolios are good, so people are spending. The consumer feels happy. You can see it in travel data. People are spending. Well, let's jump to the next one. But the inflation, this one I'm talking about, sticky inflation, you can see is in those labor-intensive areas where we haven't had inflation. It's been in durable goods. We'll jump to the next one though here. And so these are kind of the themes I have. But my big themes for this year, as far as where do I think the issues or the interesting things happening in the economy are, is, fundamentally, I'll say the big theme is we still see a healthy consumer. We still see them spending. We think that drives growth, especially on experiences. Big things, though, is that two-speed labor market I've talked a lot about. I think the other theme, and we're seeing this, all over the world, is China. China has built an incredible amount of manufacturing capacity in the last 5 years because they had a real estate bubble burst. And their strategy to deal with this was to take all those construction workers who were building housing and put them into building factories. And they have enough auto capacity, basic auto manufacturing capacity, for example, now to supply the United States, Europe, and China, just out of their factories. And they're trying to export their way out of this problem. And the problem is the rest of the world's revolting on this. So I think, I would have said, even if Harris had been elected, I thought tariffs on China were going to go up. And and it's not just a US thing. Southeast Asia is doing this. We're seeing it in places in Latin America. But it is also for exporters. I think, exporters around here or people who have to compete with Chinese imports will say, it's a tough market right now. You have a strong dollar that hurts exports. Now, it sort of went up and down yesterday to round trip, but if you look over the last year, it's up 5-6%. Up against the peso, it's up 25% over the last year, the dollar is. So you have a strong dollar, you have increasing Chinese competition, and realistically, we're probably in an environment where trade wars are becoming more of an issue and you're going to have more trade barriers. We see this as a struggling issue for the labor market. I think the other issue I talked a bit about is the deficit. So those are kind of our big themes, but let's jump to some of the local, more interesting stuff on union. So I think first of all, we're in a really good state population growth-wise. When I talk about US population, not great growth, but the Carolinas are really attracting people from across the country. Net migration to the Carolinas, both north and south, we're top 5 in the country consistently. We've been 1, 2, 3, depends on the year, but you can see consistent growth and you can see the counties where the growth is. Obviously, Union and most of its neighboring counties doing very well. We're actually somewhat unusual in Charlotte in that our core county has been growing over the last few years. This is actually a really healthy sign for our metro area. A lot of cities, I look at like a Columbus, I look at Indianapolis, which actually has had a really good run. Dallas County, Texas has lost population over the last few years. Harris County, Houston, Nashville's core county, whose name escapes me, all those places. So the fact we have a decently successful core county is a good sign because most of the growth is donut pattern, which feeds into Union County, is that like there's a circle of growth around a lot of those places with a really strong population growth, but the core county is struggling. We at least have a reasonably successful core county here, but we are seeing stronger growth in places like Union all over. And then if we jump to but I think the other interesting thing across the Carolinas is kind of interesting is that we have, 6 decent sized metro areas across the Carolinas, and each one of them have a totally different economic model. That's somewhat unusual in that, each one of them is pretty segmented. And we have more diverse strength. If I contrast it to Georgia, so much of the strength in Georgia economically is Metro Atlanta. There are a couple cities doing well, like Augusta and Savannah are doing well, but the rest of the state, essentially, if you ever look at their economic data, their population, their health data, it might as well be, it's some of the worst, most struggling areas of the entire country. I mean, I'm talking like Mississippi level metrics. So one interesting thing here, I love this chart, but this takes some explaining. If you look at, this is job growth since COVID, how net since pre-COVID peak, further this side you are, the more your metro area has grown in terms of jobs. And vertical axis means just over the last year, how are you doing? You can see huge separation in job growth. And I color coded by region because you can see the regions really cluster together. So we in the Carolinas, we pulled out just blue. We got Carolina blue there. You can see Charlotte doing incredibly well. But all of the Carolina metros, aside from Winston-Salem and Greensboro, have really been strong growth areas. And Charleston, you can see way out there. I mean, I've said in the past I have to move my axis because of Austin, but Charleston and Raleigh are up there too, when you look at that chart. So you can see it's the Texas metros, it's us, it's the Mountain West states, and then there are a couple exceptions of other regions, but generally you perform with your region. The exceptions being inland California, Riverside, and Indianapolis, where I just was actually. Indianapolis is doing incredibly well. But overall, all these places, including actually Indianapolis, is an attractive place to live. It's somewhere people feel like they have a decent quality of life. Their dollar goes reasonably far, which is huge long run for maintaining growth, though, is keeping that affordable attractiveness. And you can see that this really is, but I also think this is telling you that the companies are following if I'm putting a life sciences job in Raleigh or Durham, I can just as easily put it in San Francisco and Seattle and find that workforce, probably. But right now, the workers are telling you and showing up that they'd rather be in Raleigh or Durham. A lot of those companies will have offices in multiple locations, will post the jobs in multiple locations. And what they're finding is the workers are telling them where they want to be. They're telling them to a large degree that they want to be in the Carolinas. This is we're in a really good stretch here. So I'll jump. I'll just sort of skip most of this stuff, but I think the big things is you can see, our population growth here has been remarkable over the last 20 years. You can expect huge growth going forward. I don't think, obviously, any long-term forecast is not set in stone. That's projecting current trends forward. But the reality is, this is a pretty successful metro area if you make the right moves, if you build the infrastructure, if you build the capabilities. But, a lot of areas will eventually sort of hit growth headwinds, and part of that is the infrastructure piece. That is not a foregone conclusion, and you know what? I'd much rather have these issues and these challenges, because if you're not growing, you're dying when you're a city. And, having a real growth strategy takes planning and effort, but it also makes a lot of your problems easier when you're budgeting. A lot of problems are easier when you're a growing area than when you're a declining area or just area that's stuck. So I'd much rather have those challenges than the opposite, but that takes effort, that takes planning and initiative. So we are seeing, really good unemployment rate, very strong, local income. This is a pretty wealthy county and everything else. But if we jump to the next one, I'll show you one more. I think this is an interesting thing that's happening across the Carolinas. We're seeing it here. It's the EV thing, and also aerospace are really some of the big drivers I see for the Carolinas going forward. Traditionally, the entire auto industry basically followed something called Auto Alley, which is if you draw a line straight north from here, from Alabama, up through Michigan, Detroit, and even into Ontario, that was almost every auto plant in the US was along a couple highways, because they just have their trucks run up and down those highways, moving parts up and down, and that was where most of the auto plants are. It started shifting east more recently, and now it's really the new battery plants, new vehicle plants, whether it's Scout down in Columbia or, battery plant, Toyota battery plant up in Greensboro area. You're seeing it shift this direction. And why is that? Why did Hyundai choose Savannah, for example? They chose Savannah because the population was a lot younger than Southside Virginia. And they thought they could get workers to move there if they didn't have them, because Savannah had a really tight labor market. But they said this is an attractive place to live. It's a growing place to live. If we don't have them here, we can get them to come here. And that wasn't true. And so the second place, basically the runner-up, which is not where you want to be for a big auto plant, was Southside Virginia, like Southwest or Richmond. And the demographics were just very different there. It wasn't a growing area. It's kind of a depressed area, and it's very hard to get. Automakers are looking at that. They're looking at that aging population, that gray and skilled workforce, and they're not loving it. And they're worried about that too. So, part of being an attractive place to live is for growth. So with that, I'll pass it off to Ben, and we'll get questions.
Thanks, Jim. So I'm going to go old school. I brought everything up on a piece of paper, so you'll see my name up there the whole time as well. I don't have a phone or anything like that to look at. Can't see it anyway. So what's up, everybody? My name is Ben Kinney. I'm publisher of Business North Carolina Magazine. And Walt did a great, gave you a great description of what we do. Essentially, it's telling stories, right? So we tell stories about the economy in North Carolina, which is basically the people, the places, and the businesses and industries that make up this incredible economy. Great thing about North Carolina is it's changed over the years that we've been covering it, 44 coming up on. And it's really been cool to tell those stories. We have a very diverse economy across the entire state, right? And one of the great things that I get to do is go around and listen to those stories as well. So a couple things about what we do. Obviously, we have the print publication that comes out once a month. That's how we started sharing those stories. We have really evolved. And one of the things that we've been talking about and we will talk about today is how much that industries have changed and how they've evolved over the years. Disruption's a big word we say. Technology is a big factor in that, right? So media is definitely no different, as you all know, without a doubt. Media is very different than what we were doing in 2008, right? So essentially what we do is we still tell those same stories about things going on in our economy in North Carolina, but we just do them different ways, right? So we just do them in very different ways because our audience wants them in different ways. So in addition to the print publication, what we do is we have a daily digest email that's become very popular across the state. Essentially, it's a recap of everything that happens in business over a 24-hour period. Every weekday. In addition to that, we do a daily digest extra, which is breaking news on Tuesdays and Thursdays in the afternoon that goes out to those same groups. We also have we have some specific emails. We have a military business newsletter. As many of you know, the military is incredibly important in North Carolina in terms of the economy, from just all aspects of it. Its effect on the economy, employment, labor force, all those kinds of things. So we have a once a week, very, very in-depth email that goes out, subscriber base only. We also do a political newsletter that just totally focuses on statewide politics and its effect on business, specifically called the NC Tribune. In addition to that, we also have statewide business conferences that we bring people to. Next one coming up is our manufacturing conference in Winston-Salem called MFG-Con in May. 2 days where we bring people from plant managers to CEOs to talk a little bit about manufacturing for 2 days in Winston-Salem. You can find all this at businessnc.com. And finally, what we do is our multimedia stuff, YouTube channel. I do a podcast called Chatter with BNC, where I talk to some of the coolest people in business across the state once a week. So we're all over the place. And the thing that we're all finding out, and this is our labor market these days, and you all know it better than anybody, we got the same number of people doing a lot more different things than we used to do. That's the life we live in, right? So anyway, as I said, one of the things that's being published here, I like to go talk to a lot of different people over the state about what they're doing and visit different areas and stuff like that. And fortunately, last Friday, I was in Greenville, North Carolina, in Eastern North Carolina for their economic developers forecast. The Eastern North Carolina Alliance is what it's called. And the keynote speaker there was Dr. Laura Ulrich. She is the senior regional economist for the Richmond Fed. So she did her presentation there. And I'm sitting there in the back of the room and I'm like, oh, dang, this is great. I'm going to take everything that she says and use it for this thing I'm doing on Tuesday. So I waited for her and saw her and stuff like that. And I was like, hey, this is great. What's in the Fed's head? I didn't want to step on Ian's toes. I think we can kind of overlap a little bit and stuff like that. But essentially what I'd like to do is I'll take things that I've been hearing basically for the past month. In terms of forecast and such. So the first part will be what this presentation was, and it's pretty good stuff, and it's very similar. It's more of national, but it also tell you some regional things that might be of interest. Next is something that we did when we did a North Carolina economic forecast 3 weeks ago for our readers, and we had business leaders talk a little bit what was on their minds. very quickly, kind of a synopsis of what that came through. And then finally, we basically, our Daily Digest on Friday, I send something out to our readers. And those are like the, on the ground, boots on the ground, CEOs, decision makers in North Carolina, just what is on your mind based on where you're at when you're looking at 2025. And so this is kind of what we had. So starting things off, what I'd like to do is just kind of talk to you a little bit about what that presentation was from the Fed's point of view, is where we are now. And basically it's 2024 is another strong year for economic growth. It was. The economy looks strong going into 2025, but there's considerable certainty underway, as you know, especially the past 48 hours we discussed. Many forecasts expect economic growth in 2025 to be even stronger than 2024. There are some economic indicators show slowing in some cases, but continued growth in others. Fears of recession seem low currently, but people are still worried here in this country. Consumer spending remains robust. The pace of job growth has been impressive nationally, but some states are faring better than others. North Carolina is faring better than other states, and Ian mentioned that. Some metro areas, including Wilmington, Charlotte, and Raleigh, are outperforming some larger metros and more rural spaces. This is industry and geography based. One thing I will point out, and I'm going to talk a little bit more from a statewide perspective, pay attention to Wilmington. That's one of the places that in the past 5 years has really grown. The pace of growth has been huge from that standpoint. The Fed is very concerned about inflation. It's still above that 2% target. It's declined considerably. I think it was like 2.6 or something like that. But man, it has been slow going trying to get it down to that 2% level. Economic growth has remained strong throughout the past 3 years, even in the midst of considerable inflation. People are feeling really good about that. Real consumption spending has remained strong, and it still exceeds pre-COVID trends. We still have some well above pre-COVID levels of employment nationally, but nationally we haven't returned to it. And Ian said this, but that's not the case in North Carolina. North Carolina and South Carolina have just gone through the moon in terms of total employment, which has been really good. So we're exceeding that actual national trend. The Carolinas, and this obviously what the Richmond Fed represents, the District of Columbia, Maryland, North Carolina, South Carolina, Virginia, and West Virginia. The Carolinas are dominating the recovery from that standpoint. So it's just been really good to see. South Carolina, I think, is ahead of North Carolina, but they're both way strong. The MSAs are well above pre-COVID employment levels. Some have grown impressively. These are the metro areas that have grown over kind of the North Carolina average, big time. Raleigh, Wilmington, Jacksonville, Charlotte, Durham, Burlington as well. And you can see that's a triad area. And I was born in Burlington, so I've got a little bit of a little favor of it. But the great thing about it is that you're starting to see the Piedmont Triad in certain places of there really coming to the table. Over the past 20 years, Charlotte and the Triangle have really dominated growth, right? And the Triad's just kind of held its own a little bit, and because it took such a beating, with textiles, tobacco, manufacturing, and things like that. It's really starting to recover now, and you're really going to start seeing it east of the Piedmont Triad traditionally, and that's what we're talking with the battery plants, with Toyota, with Wolfspeed, and those kind of factors right there. Boom, we'll see, but in terms of Greensboro, but those are some real big announcements they're taking place. And that whole area, your Asheboro, your Chatham County areas, are really going to see some growth, big time. Labor force participation is not fully recovered, and projections foresee additional declines moving forward. And we're talking about this is that baby boom generation as well. Like I said, my parents are that generation. I'm Generation X, and my parents have been retired for 5 years. They're not going back to the workforce, believe me. You don't want them back in the workforce, believe me. You do not, believe me. as well. Something that's cool to take a look at, I think you guys, this is an Eastern thing, but it has to do with population growth. So they gave and you probably saw in the map that Ian had, the Northeast was really red in terms of population growth. There was I think the Fed did something, population change from 2010 to 2020, 23. There was a lot of red in those Northeast areas, right? But then they went back and redid something from 2020 to 2023. They went from pink, and a lot of places went blue in terms of population growth. So what does that have to do with anything? Well, it means that a lot of people are moving to that area, the Inner Banks area, than there used to be. So there is that growth there. Now, the question remains is that growth, folks like my parents who are retiring up to Edenton or Bath or Little Washington and stuff like that, you're not really adding to the labor force in that standpoint and stuff like that, but you are adding to the population. But since COVID, what ended up happening, we see, is that a lot of folks basically, after COVID went, I think this is a great deal to Wilmington's growth. A lot of folks left Raleigh, they left Charlotte and said, I'm getting out of here. I'm going to go live at rent a place or buy a second home at the condo or in the mountains. And they found out they could stay there and work. And so that's a big factor that things are happening as well. So anyway, that was just kind of that was kind of interesting to hear what was on the Fed's mind, I thought. The other thing, we were talking about inflation, and I don't know if we covered a little bit, but one of the major factors that's keeping it so stubborn is shelter cost. Housing, good Lord, it is really, that's something I don't know if they can get their arms around in terms of getting affordable housing around here. Now, we talk about that all the time. Charlotte's been talking about it. The city has, Raleigh and all those places doing stuff like that. But until somebody really gets their arms around that problem and is able to deal with it, because there's so many different factors. You know what I mean? It's like, how many available homes are, how much do you have available? But also we get into this tariff issue and stuff like that. And then you talk about building materials, the cost of wood and lumber and those kind of things. So it's a whole myriad of factions. It's always changing, but it has really stayed consistently high compared to a lot of other factors. So I thought that was really interesting. Next, I'm going to talk a little bit about what came out of our North Carolina economic focus. We had Campbell University, the Lundy Fetterman School of Business was our partner on it, and they kind of gave us a little bit of a synopsis I'll share with you. They forecasted the economy would slow last year, but it actually did much better. Real GDP growth in the U.S. was 3.1 in the third quarter of last year. Most sectors as well, except for leisure and hospitality. We've seen that's changing. Construction was down, but it's bouncing back, and manufacturing is down some. Our state's unemployment increased a bit, but most of it was tied to Hurricane Helene's impact. That's one factor that's very big here, but that happened obviously in the fall. Asheville's unemployment rate, for example, was 7.8% in October, but that's obviously going to fall. There was a large increase in initial claims for unemployment. Think about this. Employment peaked at 300% in early October in Asheville. That's amazing, but obviously there's a major factor. Recovery efforts in the mountains are taking effect. FEMA started spending about $15 million, and the state's requested more federal money, so things are starting to return to normal, and that's going to continue. We came out with growth's going to continue about 2.5%, maybe slightly lower this year. Unemployment will remain where it is, 3.7, 3.8%. Our group didn't see a recession coming, that there are caveats. They're still higher than normal inflation, as we mentioned. Interest rates are going to stay the same, but they're paying much more attention to it than 3 weeks ago, quite frankly. Tariffs are going to have a big impact on North Carolina. North Carolina is the 14th largest exporter of the 54 U.S. jurisdictions. Its three largest export destinations are, anybody? You got it. Mexico, Canada, and China. Tariffs will raise prices on imports too, so there's going to be an inflationary effect if they transpire. However, the consensus is that we've been through this show before. Everything that happened yesterday, did you kind of think it was going to happen or did you kind of not? I mean, that was a 50-50 bet, right? So it's just going to be uncertain, and we'll see. What I'd like to do now is, this is the fun part. So this is where I kind of ask some of our readers to give you some ideas of what's happening across the state in their eyes. And then some of it's good, some of it's upbeat and stuff like that. It's just kind of what people are feeling. So the first one, it says, I've been a commercial real estate practitioner for over 25 years. Firm's headquartered in Wilmington. And it's come up on its 11th anniversary. of this company. And so this person said, our industry took a huge sigh of relief after the election. Myself and some other colleagues have commented, we've seen more activity this year than we did the entire fourth quarter of last year. Being commercial real estate is such an integral part of the economy. I thought this might be worth sharing. This is from a major architecture firm based in Charlotte. The past 18 to 24 months were the worst period since the Great Recession for our clients. A great percentage of projects went on hold or were canceled. Q3-4 of 24, we saw people beginning to discuss projects, but they were extremely gun-shy about actually pulling the trigger and spending money. Interest rate cuts accelerated our clients' interest, and discussions began moving towards committing or starting or restarting design work. At the beginning of the year, we saw a significant increase in activity and actually moving forward with projects. Best activity in 2 years now, but still not at full steam. Huge concerns the Fed rate and immigration as it relates to construction viability. Tariffs have created a lot of pressure on costs and construction of goods and potentially supercharging inflation. Immigration reform will limit what is already a problem, and that it is labor costs in construction and manufacturing. So this person thinks that they're hoping immigration and tariff talk is more bluster than reality. Here's somebody from the eastern part of the state in Roanoke Rapids. It may be interesting to study what's happening in North Carolina just beyond the rural areas and major interstates. The combination between major interstates and rural areas. There's hope in rural areas that people will be traveling from rural areas like bedroom communities into major metro areas as well. It's always interesting diving into the large part of in North Carolina between 95 and the coast. I saw this when I worked at ECU. Those out of Raleigh on I-40 South in Tesla closed their eyes. Closed their eyes at I-95 and opened them at their beach house. While poor and rural now, what enormous potential for growth. The ECU's CEO for ECU Health is doing a lot of things to help with this, which I think is really cool. You know, we do a lot of talk about the rural portions of North Carolina, and I think something that people are really tagging on is we're starting to see growth in those areas. Not, of course, like these major metro areas, but there is growth in those areas in certain pockets. How are they going to deal with that growth? What are they selling? How do you work in those economic development efforts is something that people are really looking at right now. This is from a business broker. The biggest trend we've been watching is the silver tsunami, baby boomers and their transfer of wealth. As intermediaries, we're interested in how and what boomers who own businesses will do with their companies. We've seen fits and spurts of activity over the last several years. Things were happening quickly until COVID hit, and it slowed activity down. As COVID started to wane, things were heating up for a couple years until the high interest rates happened and curtailed activity last year. We believe there's a dearth of businesses for sale right now and lots of capital still waiting to be deployed. With this being a seller's market, we believe that we will see more business owners deciding to sell. And finally, this is something that somebody sent that's from Western North Carolina, Economic Development Partnership there. Over the past few months, my team and I have been talking with local businesses about the impact of Helene. One thing is clear, losing businesses during the peak season has hit hard. As you probably know, many tourism-based businesses rely on September through November revenue to carry them through slower months. And this year, that didn't happen. Some businesses saw a 30% drop in sales, while others experienced losses as high as 80%. This has been a tough blow to our economy, but I think we can take steps to prevent that kind of disruption in the future. One key way we're helping is by building a more resilient economy and solely dependent on travel and tourism, working with companies to bring higher paying jobs to the region, creating more stability for our companies. And that's a key thing that Western North Carolina is learning. Bottom line is this: North Carolina, we're in good shape. We are poised for doing some really good things. Why is that? I think a lot of it has to do with the fact that we've gone through a lot of challenges in the past. And when you cover this economy like we have really taken a beating in many instances. I mean, you look at the Charlotte area in the Great Recession, you look at things like, obviously in the 80s and 90s with the shutdown of a lot of manufacturing and stuff like that. We learn from those mistakes, right? You diverse, you get different ways of revenue streams coming into your state, different businesses, which is good. We're doing really well with that. One of the factors is our great community college system. In my opinion, we have one of the best community college systems in the state, hands down. I mean, in the country, hands down. We were good at basically bringing businesses in and talking to those businesses about what they wanted, getting the workforce that they needed, and training those workforces adequately. We've taken that another step here in this state, in my opinion. We are thinking about what those businesses want when they come in terms of retraining. We are thinking about those things well ahead of time. And when those businesses finally do come in, we have solutions for them ready to go. We have options for them. That is key for us. And I think that has a lot to do with our leadership, basically all across the state, including here in Monroe. So I think things are really good. We're in a really good spot. It's just basically kind of keeping an eye on the prize and making sure that we still do it. Workforce is still one of the most major things that we're going to have to deal with, without a doubt. And that's just because of things like we talked about, this great tsunami, and basically the need for big companies coming in here and needing a highly trained workforce. So I've said my piece, and I'm sticking to it. So thank you all very much. Look forward to talking to you. Good job.
Well, Ian and Ben, thank you so much for those presentations. I can't imagine anyone being here and leaving being a pessimist today, with all the information that we learned about Monroe, about the region, the growth, and the future. We're on a great journey here, and all of you are part of that, and you all should be extremely excited about tomorrow and the next day and the next week and the next year. One of the things that I told someone not too long ago, sort of coined this phrase, and I found out a lot of my friends use it. I told them this about a month ago. I said, you can't continue to do economic development the way you did it way, 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 way back in 2024. You can't do that. If you do, you're behind. Same thing with your business. And one of the things that COVID and the storms and all these things have taught us is that we need to continue to adjust and adapt and move forward. And the information that we got today helps us to do that. I also want to make sure that before we go into questions here, again, to thank not only the city of Monroe for all the hard work to put this together, but especially the Union County Chamber of Commerce. If we could get a big round of applause for them. An outside person like me coming in here to work in Monroe, but seeing how everybody came together to put this on, and then the crowd that we have today was just outstanding. So thank you for being here. We will have some questions. They have some mics, and I think somebody has a microphone floating around. There's Bradley. So whoever has a question for Ian or Ben, if you would, please raise your hand, and Bradley will run over to you and hand the microphone to you. And I will repeat the question so that we can get that question on the video.
We have our first question here.
Good morning. Thank you for being here. My name is Michael Evela. I guess what kind of recommendations would you make to decision makers to ensure that we can continue to either attract or ensure that young professionals remain here in this community, providing those opportunities to establish their own roots here and ensure our long-term sustainability with our economic development?
Question is, in case you did not hear that, what kind of recommendations would you make about essentially maintaining our workforce to get them to stay here and to motivate them to continue not only to work here, but also to expand those numbers? Is that correct? Is that good?
Yeah, I'd say like when you look at the cities that are growing, obviously you have a vibrant economy, but housing affordability is a huge issue. California, that's a big part of the story of where's the growth in California happening. It's a little bit inland. It's not on the coastal cities, despite having really nice weather. Nice weather helps. Don't get me wrong. The further north you are, the bigger challenge we have in terms of growth in this country, in terms of attracting people. So, we have that. That's easy. I think having an authentic downtown experience is part of making it a charming place to live while still having reasonable housing, reasonable schools, good school system. All of those pieces are part of what pull in the workers. And as I was pointing out, if you're a company, you're going to follow the workers. You're going to follow where can you find people? Because right now, that's one of the biggest challenges companies face is finding enough people. And they'll come here. I mean, it's why Huntington. Honestly, I'll give you the plug for why Huntington's here. A big part of it was, we see growth in the Carolinas. We think it's attractive. We pulled in. But the reality is Charlotte is a heck of a banking talent pool too. There are a lot of us, including myself, with a decade plus of experience in commercial lending. And we at this point have a floor in downtown, a whole floor of one of those big office towers downtown. We actually have 2 of the CEO's direct reports are based here. So we're just an example of one of many companies. And what's kind of happened is we've outgrown our space very quickly because the reality is we have a pretty large talent pool. And we have a lot of people from other markets who even already are working for Huntington and said, I'd like to live in Charlotte. We have an office there now. I'm moving. Can I work out of our Charlotte office? I don't mean that as a brag on Huntington. I mean that as we're a microcosm for what a whole lot of companies are experiencing here. That attractiveness, that place to live, but you have to maintain it. You have to work to build that out. That's infrastructure, that's schools, that's keep building housing. It's building on that success of, keep doing what you're doing right. But it's hard. It's not easy to keep doing what you're doing right. That takes real effort.
Yeah, and I think also having the support from your community in terms of entrepreneurial programs is incredibly important. You have to have a community, and you have to have something you have to have some sort of an entity that's going to bring those people together. So, and I'll say this for Wilmington. I've got a friend of mine that runs entrepreneurial programs down there, and he's passionate to a fault in terms of what he does in that area. And that's just one person. But in addition to, the university here has an entrepreneurial program set there. And I think that's a big catalyst for their growth. They've been doing it. It's been in place for about 10 years, and it's key. So you definitely have to have the support of your community in terms of, hey, I've got the same issue as this other small business owner, or how do I talk about finance? How do I talk about marketing? How do I talk about those different things? You need to have a collaborative place where a successful group can get together and kind of flesh out ideas from that standpoint. It's key.
Thank you, gentlemen. One thing I will tell you is that whenever I was at this meeting in Florida a couple of weeks ago, I had a chance to talk to some people from all throughout the United States, a lot of economic developers. I was really surprised of the number of people that I talked to and from different parts of the country, and they were saying things like, I don't know what we're going to do. We don't know how things are going to happen next year and the year after that because we're losing people. People are not moving into the area and all that stuff. And with that, I'm trying to be as calm as I can by not jumping up and down and telling them about Monroe. It's very difficult not to hurt their feelings, but there are a lot of people out there that's hurting. I mean, a lot of people hurting. And right here, with not only our potential that we have, not only with what we're going to be doing with economic development, but a 60% growth in population in the next 25 years is just like what Mark Watson said. He said, fasten your seatbelts. It's really going to be just amazing, amazing. And I'm proud to be part of this, and I know all of you are too. Other questions out there? I know we have some more questions. Yep, here we go.
Thank you. Father Benjamin Roberts. I'm the pastor of Our Lady of Lourdes Catholic Church down on Franklin Street, a parish of about 6,000 people, roughly, 90% Hispanic by culture, which is not a reflection of their language nor their immigration status, but simply a reflection of the culture. And I think the average age in my parish is about 8. So I have the current workers of Union County and all of the future ones. So a big part of our concern in our area is what is going to eventually happen to those who have DACA status. And DACA people are the ones who were brought across the border as children. Now, the youngest of those, or the oldest of those kids are 40 now. Like they're around 40. So we're not talking about little children anymore. And that's a big concern about how their status is going to be affected by different things. Now, the other thing you mentioned about our wonderful community college system, DACA students, people who have this quasi-legal status, have to pay out-of-state tuition at our wonderful community colleges, which is kind of an obstacle for them who would like an education. Now, I know very well that economic power has political power. I also know that I have evangelical power, but not economic power. So some kind of statement lobbying about perhaps in-state tuition status for that would be an amazing thing. Because Monroe has such a large group of active communities of faith, and I'm not looking for more work for myself, but if any of my brothers or sisters in ministry are, by all means, it might be a good idea to have some of the faith leaders as part of economic development, because of course we have those great connections. It was, in the old days, I know in France, the idea was that the local parish priest was the economic development officer. He was the one who would point people to jobs. I don't need that job, but I imagine that if the city and companies make available to different leaders of faith needs for jobs, we would be very happy to send people your way. My question would be, do you think there might be some progress on either of the two issues, either on the young workers or the or how we might advocate for that in-state tuition at our community colleges?
Thank you, Father. And the question was, in case you did not hear it, the question was about the possibilities of in-state tuition for the DACA students, particularly in community colleges.
Community college makes sense, but I think that the key thing would be obviously your elected representatives definitely need to hear from that, and convenient that you're telling me this because they will. I'll write about. We'll put something. I can get in touch with our guy at the Tribune, Ray Gronberg, who's really interested in that, and could probably cover something like that as well. And you're going to have the support of your business community. From that standpoint, because you have to make the case that, look, this is good for us, this is good for business in Union County, this is why we feel this way. Now, my question is it a community, is it just a Union County issue, or is it just is that a statewide community? Because I think it's a statewide community college issue. Yeah, I would think so from that standpoint. So, yeah. No, but I think it is from that standpoint. So we're talking about the North Carolina legislature, but we're also talking about the community college system from that standpoint and what they're thinking and stuff like that. So it'd be a great question for them, and I'm happy to ask it for you.
I think we have time for one more question. Ian, did you have a response to that? Okay.
I have no grand insights on the state legislature. I would say fundamentally that, especially my theme of if you're talking to warehouses, if you're talking to restaurants, they still see a very tight labor market. They have a hard time finding workers, and that's the reality of the current labor market, and especially skilled workers for the kind of stuff that community colleges do, which is the reality is, we don't have a great apprenticeship system in the United States. We're not like Germany or something like that for manufacturing. And a lot of that manufacturing education actually happens through the community college system. So addressing labor force issues in manufacturing is directly connected to the community college system.
Before I invite Mayor Burns back up for a special presentation, we do have time for one more question if it's out there. And also, while this question is being asked, there will be a QR code up here for a survey. And if you would take the camera out and use that, I know it works from the back row because I was here yesterday and I was on the back row and my camera picked it up. So don't say, oh, that's too far away. Go ahead and do that, and that will help with the survey, and that'll help us plan for next year's event and also help give us some insight on that. And with that, I'll invite the mayor to come up while we get this last question.
Good morning. My name is Eric Paskowski. I work for Groundhog one of these manufacturers that you mentioned about skilled workers, and actually that was my question. was that we're actually struggling with that now today in trying to fill these skilled worker positions at our facility. Have had job openings for over a year to try to get somebody to fit that role. Is there a correction that will naturally occur to try to fix that problem, or is there some sort of action that we should be taking as a community to try to fix it? And if so, then what could that be?
Question is what can we do to help fix the lack of workers? Is that correct? Is it skilled workers?
Yeah, I mean, I think the unskilled, well, not, I hate to say unskilled, but less skilled worker piece has gotten a bit better. We have a little less turnover, generally what I'm hearing thematically there. On the skilled worker side in manufacturing, my very first job out of college was I covered manufacturing for the government, and I'd interview people about like, what are you hiring? What are you looking for in education, everything else. And this was a theme I heard 20 years ago. I think the reality is it's probably gotten worse, those issues have. And I don't think as a country, we really have systemically addressed this. I think it's a huge issue. I think we are seeing now sort of a correction from the fact that we probably over-indexed to college education. We're seeing fewer kids going to college. I don't necessarily think I think that might be a good thing if we saw them going into other skilled training pathways. I think a lot of them are seeing 22 an hour for unskilled jobs. And, you're 19, you're living at home. It's, 22, 23 takes you pretty far. They don't quite realize that in 5-10 years when you're paying your own mortgage and maybe have a kid, 22, 23 is not taking you very far. I think this is fundamentally something we as a country need to address in a much more robust way. While the community colleges are trying, I don't think we're doing enough. I think in North Carolina we can, push and figure out ways to do better on that. The problem with any apprenticeship system in the United States, we always heard though, is, you do the training on this worker, you pay them to train. And then, somebody down the street who doesn't do any of that work offers $3 an hour more and they leave. So that always makes employers hesitant to train. So there needs to be some sort of government helping fund that option, because right now, you have that problem, the apprenticeship system, as companies really are hesitant to invest that money if it's just going to go out the door to their competitor down the street, all that investment. And yeah, I think that's a huge unmet labor need. Like, even though manufacturing employment hasn't been growing in the last year because durable goods sales haven't been great, I haven't heard, I don't think there's a shortage. There's still a labor shortage there. In other areas, there's plenty of people coming in, college grads, plenty of those folks. So we need to figure out how do we redirect some of those smart college grads who maybe want to work with their hands, whether they're college grads or they're just on the pathway to college, that maybe we can get somewhere, show them that there's other pathways to good earnings and good education.
And I think also that, we do a little work with North Carolina Committee for Business and Education. And a big, in terms of going into the high schools, and working with apprenticeship programs, has taken a lot more. There's a lot more momentum behind that than there was, say, 10 to 15 years ago. So I think there is a recognition that is a factor, but we have to go earlier into. You can't just use college or anything like that. We have to go into high schools and basically work with those folks at that level to say, hey, look, listen, here's this high school. Here's what you could be making. This is a high skill level job that is, you could come right out of with a high school diploma. And you're making this amount of money, and it's far past the 22, 24 and stuff like that. So even better. But we need to promote that more. Businesses need to promote that more as well, from that standpoint. But yeah, it's a challenge.
Ladies and gentlemen, if you would show your appreciation for our two speakers, Ben and Ian. And I know everyone has done the QR code, so thank you for doing that. Also, if you would show your appreciation not only to the City of Monroe Economic Development Department, the Union County Chamber, and the staff at the City of Monroe, if you would, please. And it's my pleasure now to reintroduce Mayor Burns for a special presentation. Mayor?
I got my papers messed up with the mayor's.
Once again, thank you guys so much. Let's give them one more round of applause. I'd also like to thank, before we continue, our incredible city staff. Just the amount of effort that they've also put in, not just the Economic Development Office, but the staff. You have Bradley and Peyton, and you have everyone from the Dowd Center Theater here. Y'all have done an impeccable job, and it's incredible. Thank you so much. Good job. Okay, so first and foremost, thank you for your insight, guys, today. As a city, we would like to give an honorarium. I know we were just talking about this, how incredible our local community college, SPCC, is. It's integral to our foundation here in being such an incredible city. All of our businesses, manufacturing, and our new apprenticeship programs that they run through. So with that being said, Ian, on behalf of Monroe, we want to give you an honorarium to the South Piedmont Community College. Ian. Yeah. Ian. Okay. Also, Ben, on behalf of the City of Monroe, we would like to give you an honorarium to SPCC as well. Thank you. Okay. Well, we are going to talk about somebody really fast. As you can see, one of the groups that's helped us sponsor today's event is Union County Chamber of Commerce. We just got word the other week that Ms. Pat Kale is retiring soon. And we would like to thank her for all her hard work and dedication back to this county, all the businesses and the effort that she's poured in to this incredible city. So Pat, if you would come up here, please. Pat has worked tirelessly for this entire city and county. And Pat, we're grateful for you. We're so grateful for you. So on behalf of the City of Monroe, we would like to give her this honorarium to SPCC. Thank you, Pat.
Thank you. Thank you.
A couple more thank yous for today. I'd like to thank ATI, Griner Bio 1, Assa Abloy, 3M Scott Safety, Tyson, Ludwig USA, ConMet Coca-Cola, American Wick Drain, Bono USA, or Bono US, Brooks Tools, Charlotte Pipe, Circor, Cyril Bath, Darnell, Decorative Specialties, Windsor Windows, Golston, Midway Aerospace, Oro Manufacturing, Spira Flow, UTC Aerospace, Monroe Hardware, and Locust Lumber. You are all just so integral to our city. We are grateful for you, your partnerships, your businesses here, and we are incredibly excited on behalf of the City Council of Monroe and all the leadership here, on behalf of all of our citizens. Thank you today for showing up, for coming here, and the best is yet to come. God bless each and every one of you. Thank you. Go out and mingle. I don't know if there's any more food, but thank you guys. God bless.